Hey guys, Paul Seils here. Thanks for joining us and listening to this video. We're going to be covering off with Ben from Premier Wealth Protection, which was founded in 2011 after Ben saw a gap in the market for a specialised boutique firm which could provide personalised levels of service that the major insurers could not. From the very beginning, the company's mission statement has been to help everyday Australians protect their wealth against uncertainties of life. To date, Ben and his team have helped over 1,000 Australians and their families manage their risk and protect their wealth, a benefit Ben believes all Australians should have. So, Ben, thanks for joining us.
Thanks for having me, Paul.
Great. So, where do we start this conversation, particularly for people that are uninitiated or perhaps have previously had industry super funds, particularly now they're like taking control of their self-managed super funds for themselves. Let's just start with that part of the conversation first.
Well,
Um,
okay. I
yeah.
suppose being doing this for almost 20 years now, I realise that insurance is something that people don't think about. They don't want to do it. It's basically a grudge purchase. But also dealing with claims for 20 years, I have realised how important it is to spend half an hour to get some advice from someone who knows, a professional who's been through the whole process with clients, a particular claims process, just to get your insurance sorted out
Mm.
in a way that in a cost-effective way, but that allows you to maintain your standard of living. It's very important that it's until you claim it's not something important. But at claim
Yeah.
time, you want to know what you've got. You want to know what you've paid for, and you want to know that what you've got is allows you to maintain your standard of living if something goes wrong. So I suppose dealing with the whole process for a long time, and the whole process is realistically anyone can recommend an insurance policy,
Mm.
but it's a help through the process, and particularly the support at claim time, which a really good insurance advisor, which there are a few of, but a
Yeah.
really good insurance advisor will be there to step you through the claims process. And I suppose that's what I was a financial advisor for 15 years. I the joy I got out of my job, it was getting tough claims paid for clients who
Mm.
were on the cusp, who wouldn't get paid on their own. And then when my expertise comes in and knowing the whole process, that's why I started focusing on the insurances.
Yes, understandable. So where do people start? Like, what's the
So, as I said, most people, it all depends on the situation. If you're independently wealthy and your kids are all grown up, that you don't need your insurance. But what you want these insurances for is so that if something goes wrong, you're able to maintain your standard of living. In event of a catastrophe.
Mhm.
Um, as I said just before, it is an expense, but it is a necessary expense so that so you and your family can, you know, continue to live your life if something happens.
So how do people how do you evaluate and how do people ascertain how much cover they need, Ben? Like, do you typically to cover off on remaining outstanding mortgages, um, debts in business, etc.? Like, what's the formula for that?
Generally, with policies inside of self-managed super, they're the personal protection policies. Generally, people would want to cover their mortgage. It's a big one. The husband and wife with kids and a mortgage don't want to if your partner dies, they might struggle to pay the mortgage. But there's also kids. If you have separate families, which happens more often these days, we can insure against that. And there's also different aspects of the insurance, income protection and total disability insurance, which cover you for if you are unable to work due to sickness or injury. So, well, as I said, what I like to do is every situation is different, and everyone that wants different solution and wants to pay different amounts for insurance. What I like to do is I like to start with a broad approach. Quote and explain everything, all the different aspects of insurance, because it is quite complex, and then narrow it down from then. So I like to do my insurance advice over a couple of appointments, because, as I said, people don't want to spend time doing it. It's a grudge purchase. But if it gets done once and done the right way, you spend an hour discussing it with a professional such as myself and your family, then you can forget about it and we worry about it in a year at review time. So that's really the process with the personal insurances.
Okay, got it. And what's the different types of insurances? So you've got life, disability insurance. You mentioned
Life, yeah,
income protection.
correct. Yeah, life insurance is pretty simple. Total disability insurance generally comes along with life insurance, and that's the hardest to claim under. Because to be able to claim, you have to be totally and permanently disabled and unlikely to ever return to work. And there's income protection, which basically pays if you are unable to work due to sickness or illness. What people need to understand is income protection only covers sickness, only covers your inability to work due to sickness or injury. It doesn't cover being made redundant, which a lot of people think. I suppose the name can be quite confusing. And there's also critical illness insurance, which I think is very important. Most people, lots of people don't think it's as important, but I think it's important dealing with claims. Well, critical illness insurance is it pays a lump sum upon diagnosis of a whole range of illnesses. The reason I think it's important is particularly it's husband and wife situation. One of the partners is the high earning income person,
Mm-hmm.
and we'll just say that their partner looks after the kids, does more around the house, but and so that partner doesn't really need the total disability insurance because their income's not important because high earning income individual earns all the money. But if the partner of the high earning individual gets sick, has a heart attack, gets stroke or cancer or something like that, then the ability of the high earning partner is reduced because the ability for them to earn is reduced because they have to take time out of work to look after the family, pick up the slack, look after their sick partner as well. So I think it's very important in any insurance scenario to at least discuss it. It is quite expensive because it's the most claimed under. But yeah.
Okay. And sort of like when you're dealing with clients, like what are the top three priorities that clients normally ask you, or what's their concerns, what's their considerations?
So obviously cost is the most important. Everyone's
Sure.
worried about cost.
Yes.
If you can get a policy that covers you for what you need, if to be able to maintain your standard of living at an appropriate cost, that's fine. What people need to understand is the insurance companies, they're for-profit companies. It is very important to have, and the difference between an insurance advisor and a wealth advisor is wealth advisors do insurance, but that's their side. That's something they don't focus on. With insurances, what the insurance companies have decided, the actuaries have decided is what they want is everyone to be underwritten medically every 5 years. So
Can
what
you
they do
just
after
explain what
5
that means,
years,
Ben? Underwritten medically,
so
examination? Yes.
when you apply for an insurance policy, any of the insurance policies, you go through a medical assessment because with the retail insurances, there are no built-in exclusions. They'll cover you everything, but they'll give you a medical assessment. So, they'll ask you, have you had a stroke? Have you had cancer? These kind of things. If you're healthy, then they'll say, okay, we'll cover you and you put policy in force. But what the insurance companies want is you to be medically underwritten every 5 years. What they do after 5 years of in-force policies is they start jacking up the price for the in-force business and dropping prices for new business, which a lot of what we do, and I don't like doing it, but the only way to do it to beat the insurance companies at their own game is by chopping and changing.
Mm.
We send a review email each year, and if there's a significant saving to be made, we can change to a different insurance company depending on health and depending on the policy details.
Yeah.
It's medical underwriting is an important part, but that's something that the client doesn't really have to worry about until application stage.
Mm-hmm. Okay. And can you just talk about income protection, how that works as well?
So income protection policies, as I said before, cover you on a monthly basis if you're unable to work due to sickness or injury. Now they cover you worldwide. But you need to be under constant treatment of a doctor, monthly treatment. So your income protection pays, the current series policies will pay 70% of your income
Hmm.
on a monthly basis. And so there are different waiting periods and benefit periods associated with it. Waiting periods for income protection, generally people go for either a 30-day waiting period or a 90-day waiting period. With the waiting period, that means how long you've been off work. It has nothing to do with the start of the policy. It has everything to do with your time off work. So if you break your leg and you have a 30-day waiting period, your benefit period will start on day 31 and pay from that. And the benefit period, it's more simple. That's how long the insurance will continue to pay for.
Hmm.
Now, these policies, generally I structure them outside of superannuation. They can be paid from self-managed super if you like, but the better way to do it would you structure it outside of super,
Hmm.
because it is fully tax deductible that way. Any money that you don't give to the taxman, in my opinion, is a big win for you.
Sure.
It's money in your pocket instead of someone else's pocket.
Yes.
That's the income protection. So that's, and I think I've explained everything. Did I explain critical
Hmm.
illness insurance?
Yep.
Pretty sure I did. Yeah.
Hmm. Okay, great. Well, I think that's pretty comprehensive. Is there anything else in particular that you want to share about us with
I
us
think, I
about?
think, as I said originally, it's very important. Dealing with claims all the time. I think it's super important to have a policy that is structured to your needs, and obviously a review every year is good to do. We do that, but the main benefit of a good insurance advisor is help at claim time. Um, the insurance companies that don't, they don't make money by paying out claims willy nilly. They pay out claims when the claims are fair, and if you can structure the claim properly, and this is particularly for like total disability insurance claims because they're $1 million. The insurance company will fight and fight and fight. But I find they're the ones that I like the most because they're the hardest to get paid. But if you structure the claim properly and you speak to the medical professionals dealing with the claim properly, I find that it is a much higher success rate having someone an insurance advisor on your side to help you get the claim paid.
Mhm.
That's We don't charge for anything for that. We get paid commission to set up the policies when they're set up. But that's what I spend probably 30% of my time doing, and that's I'm 47 now. My business is quite substantial. I don't need to be chasing new business. I
Mhm.
don't really want to be chasing new business. I would prefer to, deal with existing clients, and particularly the joy I get, as I said, I've said it a couple of times, is getting the hard claims paid,
Yeah.
which really when the client really needs you.
Mm. Absolutely. Okay, Ben, that's great. I'm going to post a link in this video as well for anyone watching it. If they want to make a time with me, I'll just click on the link and make a time for a call or a Zoom or a phone call or whatever. And then I'll just connect them in with you, Ben, to have further conversations.
Oh yeah,
Um,
give me a call. Thank you. Any time's fine for me too, Paul.
yep, wonderful. Thanks, Ben. Thanks for
Well,
joining us.
thank you, Paul.
Yes.